So, if you've looked at the crypto market lately, you know it is just a sea of red. And right in the middle of that storm, Bitcoin. We're going to break down this massive crash, billions wiped out, and try to figure out what it all means for the future of crypto.
Let's just start with the headline number because it is staggering. We're talking about a drop of more than 50% from its all-time high. This isn't some little dip, a minor correction. Nope. This is a full-blown crash, and it's sending shockwaves through the entire crypto world.
And you know what's really unnerving? Just how fast it all happened. Billions of dollars in value. Hoof. Gone. Vanished in just a few days. We're talking about people's savings getting wiped out, and it's shaken the confidence of everyone, from individual traders all the way up to the big institutions.
So, the big question is, how did we get here? What was the perfect storm of factors, stuff happening inside the market and pressures from the outside that led to such a crazy sell-off? Let's dive in and take a closer look.
All right, so this wasn't some slow, gentle slide downhill. Oh no. This was a free fall, a rapid plunge that just smashed through several really critical price levels, creating what a lot of people are now calling the crypto crater.
Okay, so let's get specific. The price absolutely crashed through a huge psychological barrier, $70,000. And once that floor gave way, well, it was like the floodgates opened. The selling just got more and more intense, pushing the price down below $61,000 at its worst. And look, these numbers aren't just random. They're super important thresholds. Once you cross them, it can trigger a total domino effect of selling. So to really get why the price fell so hard and so fast, we've got to look under the hood at how the crypto market actually works. It's not just about people panicking and selling. There's a really powerful automated process that's also at play here. And that process is called forced liquidation. So what is that? Well, think of it this way. Traders borrow money to make these huge bets. That's called using leverage. But if the price goes the wrong way, the exchange doesn't wait around. It automatically closes their trade to make sure it gets its money back. It's not a choice for the trader. It's just, bam, an automated margin call. And this is where you get this absolutely brutal domino effect. A small price drop happens, right? That triggers the first round of these forced liquidations. Now, those automatic sales add more selling pressure, which, you guessed it, pushes the price down even more. And that triggers the next round of liquidations. It's this vicious downward spiral that just makes a bad situation get worse really, really fast. And the scale here is just mind-blowing. We're talking more than $2 billion. That's how much worth of crypto positions were force liquidated in just 1 week during this crash. Think about that. That's a massive amount of automatic selling being dumped onto a market that was already in free fall. Okay, so forced liquidations are a huge piece of the puzzle, for sure, but they're not the whole story. There's also been this really fundamental shift in how investors are feeling. The narrative, the hype, it's seriously faded. For a long time, one of the main arguments for Bitcoin was that it was digital gold. The idea was pretty simple. With governments printing money and inflation fears rising, Bitcoin, with its limited supply, was supposed to be a safe place to park your money, a safe haven. But, well, lately that whole theory has been put to the test, and frankly, it's failed.
And yeah, this right here really says it all. Over the past year, when inflation was a huge concern, what happened? Bitcoin dropped almost 40%. Meanwhile, actual physical gold, it went up 61%. So when investors were really looking for that safe haven, they ran to traditional gold, not its digital cousin.
Listen to what Maja Vujanovic, who's a CEO in this space, had to say. She put it perfectly. The story has lost a bit of that plot. In other words, people aren't buying Bitcoin anymore because of some grand vision for the future. Now it's just trading on pure liquidity and capital flows. It's become just another speculative asset. And it looks like the big players, the institutional investors, are heading for the exits. An analyst from Deutsche Bank pointed out that all this steady selling is a signal that these traditional investors are just losing interest. The so-called smart money that everyone thought would stabilize the market, well, now they're actually a part of the problem, helping drive the price down. Now, this isn't just happening in a crypto bubble, right? This loss of faith from the big institutions is deeply connected to what's happening in the broader financial markets, and that's creating this huge ripple effect. So for a long time, people said Bitcoin was this unique thing that didn't follow the stock market. Well, that's not what's happening now. Instead, it's been acting just like another high-risk tech stock. Why? Because the big investors are treating them the same way. as these high-growth speculative gambles that get hit hard when interest rates go up. So what happens? The tech stocks sell off, and Bitcoin sells off right along with them. And you can see that connection so clearly right here. In the same week, you have these huge drops in Bitcoin and Ether, and it's basically mirroring the slide we saw in the big tech funds. Investors are just lumping them all into the same high-risk bucket. And right now, that's the bucket they're emptying out. And Steve Sosnick over at Interactive Brokers, he doesn't mince words. He says, I believe that we've gone well beyond cyclical when it comes to crypto. It's become a full-fledged bear market. I mean, when you're talking losses of 50% or more, what else can you call it? Okay, so we're officially in a bear market. What now? What are the experts looking at? What are the key signals we should all be watching to figure out where this thing is headed next? First things first, you've got to understand this isn't just a Bitcoin problem. Not at all. It's a total bloodbath across the board. Major altcoins, we're talking Ether, Solana, XRP, they've actually seen even bigger drops. The entire digital asset world is hurting right now.
So from a technical standpoint, analysts are looking for the next floor, the next price level where buyers might step in. Now that key $70,000 level is broken, the fear is that the price could keep sliding down towards that $60,000 range before it finds any real support.
And all of this leaves us with one final, really big question. The bull run is definitely over. We know that. But with its main selling points, like digital gold, pretty much in tatters, and with it just trading like any other risky stock, has crypto's whole story, its reason for existing, just lost the plot for good?